SoftBank-backed Compass raises $450 million in downsized IPO. Compass had previously set a price range of 18 to 19 per share, downsized from its prior target at 23 to 26. Okay, so let's talk about Compass, this new IPO today. Please like the video, please subscribe, please tell your friends, and check out my Patreon if you want to support. So it opened at $18 today. Compass Inc., the U.S. real estate technology firm backed by SoftBank Group, said on Wednesday it sold shares in its initial public offering at $18 each at the lower end of its downsized target range to raise $450 million. So that was kind of disappointing, I guess, for them, because they intended to raise a lot more. Compass had previously set a price range of 18 to 19 per share, downsized from its prior target at 23 to 26. At 18, a fully diluted valuation, which includes securities such as options and restricted stock, would be $9 billion compared to $6.4 billion in its most recent private funding round in 2019. It's valued between somewhere at $6.5 billion to $9 billion. I read somewhere else it was around $7 billion. The IPO is a sign of investor fatigue for new stocks, with companies already raising over $36 billion through U.S. IPOs this quarter, up more than 360% year-on-year. New York-based Compass was founded in 2012 by former Twitter Inc. engineer Ori Allen and former Goldman Sachs executive Robert Reffkin. It covers 46 metropolitan statistical areas in the United States and works with over 19,000 agents. It had raised $1.5 billion from investors including SoftBank, Goldman Sachs, and Canada Pension Plan Investment Board. Okay, so the ticker is COMP. I did some research for you guys, so you didn't have to do it. Well, you should anyway if you're interested in this and you're looking to take a position. This is not financial advice, okay? But I did some research, and this is not a full due diligence. I just looked up what Compass is. Okay, so it's a real estate brokerage firm. So yeah, it was founded in 2012. It's kind of like Zillow and Opendoor. It looks like the same business models where people can buy and sell homes on it and also rent apartments. Well, let's just take a look at their website really quick, all right? This is compass.com. It literally looks like Zillow, does it not? I don't see a difference. This looks almost verbatim to Zillow, I'm not gonna lie. A real estate company with a purpose. Compass is building the first modern real estate platform, pairing the industry's top talent with technology to make the search and sell experience intelligent and seamless. Are they a tech They're calling themselves a tech company. To lead the industry requires the smartest tools built by the brightest minds across engineering, design, and strategy. Through our proprietary platform, Compass is changing how agents and clients navigate the process of finding or selling a home. As an innovative residential real estate firm, we empower our agents so they have more time for advising their clients, with the solutions-driven mindset of a startup and the sophistication of a luxury brand. Compass is the future of real estate. This is just a Zillow competitor, I would say, but I did look it up, and it seems like Compass caters more towards wealthy clients. They focus on luxury and high-end homes, and the brokers that use their service, I believe they are well-established brokers, professionals. They do very well in the real estate industry, and these homes that are listed, I believe, are like luxury upscale homes. Zillow and Opendoor, they're more for like convenience. The homes, the properties are cheaper, and it's supposed to be more convenient. But at first look, this literally looks like Zillow to me. Valued at around $7 billion. So let's talk about some numbers. It did $2.4 billion in 2019. That's revenue. $2.4 billion in 2019 and $3.72 billion in 2020, which is a 56 year-over-year increase. And it had a $388 million loss in 2019 and a $270 million loss in 2020. So it's not profitable yet, but we see the revenues going up and the losses going down. So that is a good sign. Yeah, the company claims it has over 19,000 real estate agents that use the platform and has done over 300 billion in revenue since its launch in 2012. Pretty impressive, I guess, on paper. It's one of the most funded real estate startups in the world with over $1.5 billion raised, and it's backed by SoftBank and Goldman Sachs. That was what I researched from this, and this is my personal opinion right here, okay, what I'm about to say. I'm a bit skeptical about this, only because of its ties to SoftBank, and this company is a little similar to WeWork. WeWork is an American commercial real estate company that provides flexible shared workspaces for technology startups and services for other enterprises. WeWork designs and builds physical and virtual shared spaces and office services for entrepreneurs and companies. Founded in 2010, it is headquartered in New York City. As of 2018, WeWork managed over 40 million square meters. So for those of you who don't know, WeWork, this company was hyped up way too much because SoftBank saw a lot of potential in this company, in WeWork. SoftBank was WeWork's biggest investor. At one point, WeWork's $47 billion valuation was always a fiction created by SoftBank. When Newman, which is WeWork's ex-CEO, took investments from SoftBank in November 2018, $3 billion, and January 2019, $2 billion, WeWork's value skyrocketed from $20 billion to $47 billion. In other words, SoftBank's investment set WeWork's value $27 billion higher than it had been. That could have been a warning to investment banks and WeWork's board that other investors may not have agreed the company was worth $74 billion. Instead, JP Morgan, Goldman Sachs, and Morgan Stanley said they could find investors willing to value WeWork between $60 billion and $100 billion. And WeWork proceeded with an ill-advised IPO that has brought the company weeks away from bankruptcy because of its aggressive expansion and outstanding lease obligations. Even the $20 billion starting point in 2018 was set by SoftBank, which invested $4.4 billion in conjunction with its $100 billion Vision Fund. Basically, SoftBank hyped up WeWork way too much because it had a personal interest in it. It came out and gave a valuation of $47 billion, which was nowhere near what it was actually worth. SoftBank values WeWork at $2.9 billion, down from $46 billion 1 year ago. Ouch. Good. $47 billion down to $3 billion. SoftBank it basically just bought most of WeWork. I think it owns 80% of WeWork now, and SoftBank took a massive L on that. But that's not the point. I'm saying all of this because, do you see a correlation? I see a correlation, okay? And again, this is just my opinion. SoftBank invests a lot of money into a real estate technology company, whatever that means. To me, it's just a real estate company. They rent office space, right? That just turned out to be a very bad investment. And really, I don't see what value WeWork or Compass brings. Like, what is different about these companies than its competition? Why is Compass better than Zillow? Somebody tell me. Am I missing something? Comment below. Do you think Compass is better than Zillow? Anyway, I just see a lot of similarities between WeWork and Compass. Not exactly, specifically, but in terms of its financial backing from this questionable company, SoftBank, and the value it brings to the market. I just really don't see what value Compass brings. But again, that's my opinion. I could be totally wrong. Who knows? In my opinion, I would not go for this. Got one more article about this. This is pretty funny, actually. This was kind of recent, a couple days ago. SoftBank ended up firing. They got rid of the ex-CEO, Adam Newman. Now, WeWork is still going public via SPAC. Of course. So in 2019, it tried to go public, and that was a major failure. It didn't end up happening because all the true financials came out. This is take two. They're actually going public now via SPAC. You know what that means. I wouldn't trust it, guys. Not financial advice. This is just my opinion. But, you know, there's this, SPACs are this new phenomenon. Lots of SPACs in the market now. But realistically, most of them, you're going to be bag holding. Most of them are a straight up scam. Like, come on. The only SPACs, there's been like a few hundred SPACs that launched like last year and this year. But the only real legitimate SPACs that I can say are like Virgin Galactic, DraftKings, and possibly Lucid. WeWork, going public via SPAC, I wouldn't do it. I don't recommend you do it. And now we're getting off onto WeWork and SoftBank when I was really just trying to talk about Compass. But it's all kind of connected. There's a lot of red flags going on over here. I don't trust it. I don't trust it. Be careful, guys. I'm very skeptical about this. Very skeptical. Right, guys. Thanks for watching the show today. I appreciate it. No show tomorrow. Today is a short week. Happy Easter. Have a good weekend. Please like the video. Please subscribe. Please tell your friends. And check out my Patreon if you want to support. I'm Ty. This is Smarter Gambling. See you Monday. I'm out. Peace.